Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. $15 silver on the horizon. The bulls are definitely the ones that are coming out on top right now. Silver, $14.67, up 40 cents on the day. We see gold down $33 at $1,640. I have a couple different articles. The first is talking about the unprecedented demand for silver bullion will push prices higher. This is this huge demand as people see that silver is profitable, as the supply has been diminishing, and people want silver because they are seeing it as a real investment nowadays. So the link to these articles will be in the description. I also have a second article talking about silver to benefit from renewed gold strength and also the coming stagflation in the case for silver. So very interesting articles I found. I definitely think you will enjoy them. So before we start, make sure to smash the like button. Make sure you subscribe if you're new because I do post daily videos. So the precious metals market continues to experience unprecedented demand for silver bullion products, even with the Fed increasing its liquidity injections by providing open-ended quantitative easing to infinity. The Dow Jones index today is still selling off considerably, down 900 points. There is no way the Fed and the central banks can backstop the markets with liquidity and asset purchases if the physical economy is shutting down. So wow. It's a great way to put it. The collapse in the U.S. economy and financial markets have brought about a record buy spree in physical silver bullion never witnessed before. In the past few weeks, precious metals dealers have totally wiped through the available stock. Now these dealers have to resort to pre-selling future supply with understanding the metal purchased today will not be delivered for a week, a month, or even several months. And that's a very, very, very scary thing to think about, because even if the biggest retailers cannot get product for several months, what's going to happen when the supply cannot meet the demand? It's going to shoot the price up. It's going to make huge premiums, which you already see in very, very, very high prices. So in my newest video update, Massive Silver Buying Much Higher Prices Ahead, I explain the silver market dynamics and how the decline in future mine supply and rising demand for physical silver would push prices up much higher. In the video, I discuss in detail how the global silver mine supply is likely to contract considerably over the next 2 quarters as the worldwide contagion continues to spread. However, the demand for physical silver bullion will intensify as markets and financial system continue to disintegrate. This will push the price of silver higher as investors move into precious metals to protect wealth as the safe haven. So here's the silver market dynamics. The mine supply. Silver mine supply, especially as byproduct of base metal mining, will start to decline considerably in the quarter 2 to quarter 3 years of 2020. Mine supply could fall by 150 plus million ounces by the end of the year. So the mine supplying is down. There's no supply of silver, no production happening. But then the investment side, the physical retail silver investment, will continue to surge higher, pushing premiums even higher, like I just said. However, as the financial system becomes under more strain, large investors, hedge funds, institutions will start buying 1,000-ounce bars. Furthermore, the low oil price and extremely low wholesale gasoline price is destroying the U.S. shale oil industry. This is terrible news for U.S. the economy and the dollar. I also explain how retail gasoline prices in the pump many cities heading back down to 75 cents a gallon. Here's one chart I discussed in the video that estimates the gasoline in Georgia 1 to 2 weeks and what it will look like in the next 1 to 2 months. So, while the wholesale price that is closed on February of 61 cents a gallon would likely equal about 93 cents at the pump, this would take a week or so for the gasoline stock to be consumed before the price makes it into my pump. So my estimate for the retail gasoline in Georgia in 1 to 2 months is 66 cents a gallon. However, today the wholesale gasoline price has fallen 20% already in 1 day. It's down 48 cents compared to 61 cents on Friday. We may even go into wholesale 35 cents a gallon, shown in my estimates above, in the next 1 to 2 weeks. Americans have no idea just how bad this global contagion and massive disruption to the supply chain and oil industry really is. The U.S. shale oil industry will collapse in the next 1 to 2 quarters and never to come back the way it was before. The U.S. was able to say it enjoyed energy independence for a few months before the entire industry came crashing down. So that's some very, very, very scary things, but it's looking very bullish for precious metals, at least, especially for gold and silver. So gold and silver has already rallied strongly after U.S. Federal Reserve on Monday rolled out some of its heaviest artillery to announce the open-ended QE, which stands for quantitative easing. It was a reminder of the moves that they made March 2009, which started a strong rally in precious metals over the following years, which actually made silver $50. Given silver's historic cheapness, both against the dollar and especially against gold, we see the potential for a strong recovery. So, the global spreading of the coronavirus will have a negative impact on global growth over the coming quarters. In response to this development, we've also seen pro-cyclical commodities led by crude oil suffer a major blow, while industrial metals have dropped to the levels last seen in 2016. The biggest casualty, however, has been silver, which derives from half its demand in investors and seen half in the use in industrial applications. But this is still showing very positive for silver because we still see silver going up. Let's look at the 1 month chart for silver. It is down, it has been hurt, but we have been seeing a large correction, and this is where the bottom is. This is where the bottom lies. Silver tends to perform like a high beta gold, meaning it rallies faster but also drops faster. It hits higher highs and it hits lower lows. So if gold's up 10%, silver's going to be up 20%. If gold drops 10%, silver's going to drop 20%. The combination of the recession worries and the recent dash for cash phenomenon helped tip silver over the edge. Once a near 20-year uptrend from 2002 was broken and the floodgates open, silver was left to be exposed, another problem that can occur when markets get out of control. So, I definitely think that silver is definitely one of the more potential. Now let's go over here. So the outlook for silver looks supportive in our opinion. The following table highlights why that is. Silver is mostly mined as byproduct, or it's found by accident basically. Silver is found by accident from metals such as zinc, lead, copper, and gold. In fact, only around 30% of silver mined comes from pure silver mines. Only 30%. Most of it's found by accident. So the 20% drop in the LME London Metals Index in January and the current recessionary outlook may inadvertently lead to lead to a supply crunch for silver as production slows. So the bulk silver production comes byproduct of other metals. So you can see that silver is coming from basically all these other things. Silver's industrial demand going forward increasingly comes out of the alternative energy sector, especially used in photovoltaic solar cells and 5G technology that we've seen, which I made a video over a couple days ago. So silver is also the best natural conductor of electricity and heat. It's generally being used in electronics, batteries, LED chips, semiconductors, and electric vehicles. And we know the EV era is definitely coming along. It's very fast, so that's definitely looking bullish for silver. So once the world begins to normalize, investors will start to look for relative value based on our assumption the supply may slow, and given its elevated discount relative to gold, we see renewed upside for silver. So gold has already rallied strongly after U.S. Federal Reserve on Monday rolled out some of its heaviest artillery to announce the open-ended QE. It was a reminder that moves made in March 2009, which finally succeeded at stabilizing the markets. So from a technical perspective, silver's already made its back above $14 an ounce, thereby sending a signal that the recent breakout of the downside was a false one. See, so the gold to silver ratio is actually at 111 to 1. I checked earlier today, so silver is outperforming gold right now, people. Silver is the better buy. So the coming stagflation in the case for silver. So contracting here. So contrary to the mainstream economic consensus, economic contractions tend to be inflationary, while strong growth tends to be disinflationary. As the chart below shows, there's tended to be negative correlation between the real GDP growth and inflation in the U.S. over long term, with high inflation rates occurring amid economic contraction. This makes intuitive sense. Fewer goods that go around, more expensive they will become. So we're going to see everything starting to become more expensive. But recent surge in money demand is likely to prove temporary. Large fiscal deficits and QE are necessary but not sufficient conditions to create high inflation. What also needs to be taken into account is money demand. The combination of the coronavirus and oil price shock has led to a surge in demand for safe haven assets, which has led to temporary collapse in inflation expectations. See by the fall, 10-year break-even inflation expectations. So I'm going to go down here. And where's silver? So here's what I want to talk about with the precious metals part of it. So gold prices tend to trends in real bond yields in short term, while over the long term they follow general price levels. Gold's rally since the mid-2018 has occurred alongside a fall in the real bond yield, but despite inflation expectations. As bond yields remain pinned down by QE and inflation expectations recover in response to further fiscal stimulus measures, this should be seen in short and long-term drivers, and they turn bullish. So here's the gold price versus 10-year inflation-linked bond yields. So the biggest winner, however, could be silver. Silver is deeply undervalued relative to gold to historical basis, with the current ratio of 111, but it says 114, more than double its long-term average. This may actually understate the level of silver's undervaluation. Silver tends to be roughly 3 times more volatile than gold, and so usually underperforms in precious metals bear markets and outperforms in bull markets, like we mentioned earlier in this video. This time around, silver has languished even as gold prices have risen. If we adjust silver both metals for the historical volatility in the chart shows below, silver works out to be a 4 standard deviations from its long-term average. So silver has tendency to undergo major rallies once momentum picks up. Our theory is that gold is a more convenient store of value, while silver is too bulky at low price to be used in convenient store of wealth. Once silver starts to rise, though, it becomes more appealing as store of value, which we've also previously seen in major surges in the metal. So silver is such a silver is the crazy uncle in the addict of monetary metals. So that's funny. So I definitely see a lot of potential with silver, and especially with everything, given the demand not meeting the supply and everything that has to go along that. Also with QE and where the dollar's headed, and and everything that's under the sun under that as well. So I thought these were very interesting articles. If you want to check them out, the link will be in the description. So I'm going to wrap this video up here. If you did enjoy it, make sure to smash the like button. Make sure you subscribe for new, because I do post daily videos. This is Silver Slayer. I'll see you guys soon. Peace.